The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 877-927, you say these numbers over, 92, I get it, just, it'll come to me, you say them by rote, over and over and over again. Well, I'm sure my producer will just punch it in and I'll get it. 877-927-6648, that's it. 877-927-6648. Yep, just got that. God, can you believe you just suddenly had these little blankouts? All right, Technical Friday. I got tons of things to do. I got a couple of questions I absolutely want to get to. Let's just run this. Here's the 2-minute E-mini chart. I had a beautiful peak D. Remember the Chapman wave? You're always looking for those Ds, the fourth highest peak. That's where the price could pull back. It did pull back sharply, but it only pulled back in a trough A and then a very long trough B before it started to rally. A very steady stair-step rally, walking the 9-period exponential moving average to a peak E, and now it's starting to pull back a little bit, digesting. Okay, got that done. I'll give you parameters to look at. If the E-mini at any point starts to trade above 27.16, starts to get to the 27.17 area, that's going to lead to a flurry of activity into the close, because this I completely forgot, and I'll talk about it in a moment. And on the downside, any move is at 27.12 right now. If it pulls back and goes underneath 27.07, so it's like 5 points up or 5 points down, that's going to be very important to the closing price. Enough with that. Let's get to our nitty-gritties. So the Dow, crude oil right now, this is the chart I'm showing because I just did the update, the TFNN update, noon update, up 0.95 and 54.74. Made a peak E if there's no new high yesterday, but the MACD is good and the stochastic is pulling back a little bit. It's under 80 at 75%, and the way it's walking both the 9 and the 14-period moving average tells me that if there's any move between now and Tuesday underneath the low that was made on the 28th of 51.33, no, that's way too much. I would just say under 52.50, there's a really good chance that you're going to be pulling back a little bit more, go sideways for a little bit, and consolidate. And if there's a push into the 55.80 to 56.30 area, a close in that area, that's really very good. Now we're looking at, I forgot to mention, let me just do this again. I forgot to mention that that's a peak E with a doji candle, and you've got to be careful because there's a chance that now you've completed this up move, it needs to digest the gain in the 2-minute chart. Whew. I do have people that love to watch this during the show, and it helps them, they say, throughout the day. So here we go. So that's crude oil. Let me go right to the beginning. So yesterday I was discussing the Dow, and I got a feeling that within the whole context of the point I was trying to make was that I love the mix of the Dow. I've loved it for about 1.5 to 2 years now. I think it's perfect for the next big mega cycle to the upside. The only thing I wanted to say is that on the shorter term, it seemed to me that the Dow had a kind of mix that said unless there was some really good action in the multinationals. You remember yesterday I looked at Exxon and Chevron, and I didn't realize that today was the earnings report. Well, the earnings report came out, and both of them really are charging up the Dow, which is the reason why the Dow is up 0.57%, while the S&P is only at 0.31, and the NASDAQ is actually much weaker. So the Dow is working its way. It's right into the Chapman wave inside track repellent zone. We are still, we took a short position last Thursday when the S&P broke above that peak C for leg D. It did pull back yesterday. I did not anticipate both the Chevron and the Exxon and for Intel to suddenly wake up to help the semiconductors because they looked like they were ready to pull back. Intel gave them a little bit of an upside charge today. So that's all stalling this consolidation. So let me just, I'll treat the emails as I need them right now. Did we just completely miss another buy mode, or is this truly overextended? Many weekly charts are still in leg A, correct? Yeah, so this is important. This is a leg A in the Dow. There are some charts that have already made leg B. And if you're going into a leg B with such a powerful move from the low, you have to consider that a pretty well-established low is formed, even if you were to come down later on. Maybe I'm thinking later in February, maybe even March. I'm not sure. But I'm thinking that there will be a really serious decline when there's a combination of really bad news. But it could come from much higher. It could come from around here if we go sideways for a while. That's to be decided. As I'm standing right now, I've got a Chapman wave stalk leg formation. Let me show you what that is. That's right here. For what I show subscribers every single day, I give them an analysis of what's going on. So this could be Chapman wave 5, could be a peak D. As you recycle from the F/C in the daily, you've made a Chapman wave stalk leg formation. There's the leg, there's the body, here's the neck, and then the beak says you should go back and test the breakout of the oval pattern, the body high, which is 24,860, big deal. 860, 350 points down. But I am anticipating that we're going to get there at some point fairly soon, even if it's from higher up. That's the key metric for me. And it means that I'm starting to shape the stalk leg formation as a viable entity for this particular phase. And there it is. So Dow parameters, a close in the 25,330 area by Monday or Tuesday would really be very positive. But a pullback, even if it's just sideways to down, says consider that a consolidation is about to unfold. Not a big deal based on the weekly charts, but as a trade, you might be thinking of it as a trade. I'd actually be looking at it part as a trade if you want to be a short-term trader, near-term trader, but I'd also be looking to buy the stocks that you missed getting, because I think this is a big upthrust in many of the very important areas. S&P. S&P right now is trading at 27.12, up 8.56, lagging a little bit. Same thing, leg D. MACD's good. Stochastics a little weak. It's at 87%, but it's it's very good right now. But it's a little weaker than it was recently. But it's telling me that there could well be a little bit of a digestive phase that could take you to the 2678, 2672, maybe even 2667, the 9-period moving average support. We'll see, but the day is young, as I like to say. QQQ, S&P breaks about another 15 points higher. That's actually a big breakout. That really raises the base. Now, the QQQ made the same pattern, Chapman wave stalk leg formation. This is the neck. The neck's holding very well. It's broken above an arch formation. It is sitting just above the 200-period moving average. MACD's good. Stochastic is under 80% at 78. I suspect, and this is a leg B in the weekly chart, I give you parameters at 162.24. If there is a break to below 166.30, you could expect a test of the 165.30, 164.80 area over the coming week or so. Next thing we're looking at is going to be the IWM. IWM is the Russell 2000, leg E. Actually, technically, this is a little bit better than the others, but at the same time, it has that same pattern. This is more like a rectangle, but it does say at 149.57, a break into the 151.30 area says, whoa, in this phase, you're going to go to the 200-period exponential moving average of 152.80. But I think there might have to be a little stalling before it does that, a little respite, a little bit of a recharging of the batteries, as they say in Tesla land. We'll be back in a moment. I'll just put gold up there to see where it is. Yeah, gold is pulling back 4. But we'll talk about it in a moment. Basil Chapman, Tiger Technicians Hour. Dow's up 133.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So Basil Chapman, Tiger Technicians Hour, Dow's up 130, S&P's only up 7.5 right now. So we're looking at, and just for those of you asking, yep, there's the E-mini. It's still coming back down. It's at 27.10.25. That was that peak E with the doji high. And the MACD turned down stochastic, so we'll be following that. So gold is down 4. This is Friday. Anything can happen on a Friday with gold. So the question I had your text message, hi Basil, where is support for NUGT, Nugget, and GDX? So what I wanted to say is, within the context of gold, gold has had a spectacular move from 1167 to the 1331. I think I forgot to update that, 1331.10 high that was made yesterday. I think gold is ready now for a little bit of a hiatus. I just heard too many people talking about gold, either CNBC or Bloomberg, whatever it is, and even calls to the show. And I'm just saying, you know what? I think that gold is done. It's a spectacular move considering how slowly and methodically it's been, because the monthly might look like, oh, that's fantastic. Look at the weekly stair-step move up. It gives almost all of it back. Next breakout up to the 1250 or 60 area. Then it pulls all the way back to the 1220s. Then it goes, oh, it takes forever in the weekly chart. Finally breaks out and it spirals up to 1300. Oh, it can't take it. It comes back to 1287. And boom, it goes to 1331. So that is very impressive by the stair-step methodical move up. I like that. That's very important. Two things. One is, I think the spiral, which looks like a single leg A to the upside, but it's actually a peak D. I'm calling it a D for now. This tells me that there's a really good chance that there could be just a kind of a period of, I'm going to draw it in. There'll be a hiatus where gold doesn't really break down. What it does is it just digests the gains. So you went to 1331. I wouldn't be surprised if the 1300, even if at 1290s has to get tested at some point, come back into this whole area, consolidation area, make like an inverse, make a head and shoulders, have everybody nervous as anything, and then it starts another move to the upside, or it breaks down. So I think the top that is just being made yesterday and kind of a follow-through weakness today with a doji candle, first doji like this we've seen in a long time, tells me with the MACD running very strongly, but way weaker than it was back when it was making the highs in the 1306 area, and the stochastic very much weaker, it tells me that there should be some kind of a pullback. So if you're looking at the GDX has the same type of pattern. I haven't labeled this yet. Just, if I had my druthers, I would put in F/A. F is pretty negative. A is extremely positive. Oops, no, that's an A. I'm sorry, F/B. Extremely positive. I'm just going to say, if you are long, I would just say this is a nice point where you can take some profits in your gold positions. Look at your charts. If the charts are actually weak, I'd take some profits from your weakest gold stocks. If you're in the GDX, to tell you the truth, if you're in good enough, I would only say to you, take a little bit off to reward yourself for a fantastic trade. I mean, position. Maybe it wasn't a trade. Maybe it's a position play. If it's a position play, then just take a little bit off and forget about it, because that's the money you want to put back. Maybe at 22.35 right now. Maybe you'll start looking at 21.50 to 21.20 area if it can get there. And the speed is going to be telling you in this particular single move up, it should move down pretty quickly. If it just stalls, it says, you know what, it's just too much going on. So I hope I help you there. This is the text. And in Nugget, I'm pretty much going to say the same thing, except because Nugget is a highly leveraged NUGT. I don't remember what, 3 times long. I'm going to have a different outlook, only because if you're doing Nugget, then you're not doing this for the longer term. You're doing it for the shorter term, whether the shorter term is weeks, hours, or days. It's the shorter term thinking. And I'm just going to say to you at 20.33, I would absolutely take off a good bit. I wouldn't take off more than half right now, because this is very early from a huge move up, but I would take something off a third or less. I would take off right now, and then I'd have stair-step moves down to 20.33. I'd take a little bit more off if it actually takes out today's low, and by Monday or Tuesday it hits 1973, somewhere around 1970. I take maybe a little bit more off, and then because it's a tradable vehicle, I say now I'm going to be very strict. If you're in low enough, I try to keep a core like 1/3. I'd have taken off 1/3 by Monday if it's hit those levels, and the other third I treat as a trading third. You might want to say that the 200-period moving average, the 9-period moving average, and the 14-period moving average are almost converging in the 1870 to 1830 area. That should be a good cushion. So that's where you might say, hey, if it holds there, you could put back some of what you've taken off. So now you got your 2/3 that you're still long, and your 1/3 that you're going to trade with. And if you trade and you can make even a little money, I'd grab that money and take it off. That would be hourly trade, just quick moves up. Try to build up a kitty. Why? I'll explain why. Because if the Nugget, the direction daily gold minus 3 times bull, can actually hold very well, while the dollar, look, the dollar is even not even, what's the dollar doing right now? Minus 0.07, 95.49. And that says to me the dollar's holding really well on the 200-period moving average, but not when you put into the context of lower lows and lower highs. I think the dollar's going to go down a little more. I think I have to wait for the dollar. Maybe it'll be 6 weeks' time, where I think the dollar's going to give another really good buy signal. It's my thinking. 4 to 6 weeks, I should say, sometime late February. And that says gold, in fact, could move higher in that interim period. So I'd not get too carried away. But in your Nugget, I would get carried away only because it's really a trading vehicle. So trading at 20.30 right now, what would I do? Right this moment, because you asked me the question, I'm going to say, you know what, if you got a really good gain, it's the Nugget after all. Take something off right now. Then you're going to take off a little bit more around about the 1970, 1960 area. And then you'll have, maybe if you're putting it in thirds, you haven't yet, now you've got a little more than a third you've taken off. So now you have maybe 2/5 of a position, maybe whatever it is, it's over half, right? You've got left. So I'm just saying to you, or maybe a little under half even, I'm saying to you the next part of it, take off a little bit and treat that as a tradable vehicle. And all of a sudden you might see it comes down, big move down, suddenly Monday, boom. And then it stalls, doesn't do anything, just holds. You might want to be trading that. Small position to build up a kitty. Try to keep your core position. The core position, wow, if this thing takes out the high that was made on the 7th of 18.44, underneath the 1830-14 period moving average. I'd say a close under 1830 says be a little more careful now. Okay, I hope that helps you. Next question, which directly purports or goes straight to what we're looking at here, is do you place any importance of large block trades? I saw KO show up late last week and small pop-up. You know, that's a really good question. And I don't have my ticker anymore. I used to always have a ticker for 20, I don't know how many years. I used to always have at least a little small television. I could see the ticker go by on CNBC or Bloomberg or whatever. I just haven't had that for ages. I'm kind of missing it only because I miss some of the stocks that are my favorite stocks on the tickers. I'll talk about it when we get back. I want to get through to the other indexes and some things.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So let me just answer the question. My experience with big blocks, and I know this is going to come under a lot of controversy, and I can't even really back this up, but this is just my empirical, having watched, that's all, anecdotal, let's call it, is that it has a small impact, but it only has a big impact if you see a number of big blocks going, with the price going up, then pulling back, and then a big block goes and it's underneath the previous big block's high, but within another couple of bars, another couple of ticks as it goes by, another couple of scrolls, it goes to a higher high. and then you see another one, and then you see, I want to see consecutive big blocks, and I want to see by about the third big block, a pretty decent move up. And that says what you're doing now is you're establishing within a point or two some kind of a base for the next couple of days. But these are shorter term trades because fund managers have a very long-term perspective. They put the block on. They could wait. They can wait a week before they put the next big blocks on. So it's a stair-step move. But other than that, I use on-balance volume, as you know. To me, that tells me a lot. Next thing is, yeah, I can actually see the charts. Someone said that they had trouble. No, everything looks great on Tiger TV. Wonderful medium we've got here. Next question I had, I only want to write this for the moment, deal with the questions that are pertaining to the market right now. The market right now is favoring a couple of sectors really well. One is the medical cannabis area. So I have a question in the Den. S&P wants to know about GWPH, one of my favorites, but we actually decided because of the price, we would go for something, two lower priced ones, and they're actually up very nicely. One is up 2.59. What he's talking about, GWPH, which is GW Pharmaceuticals, is up 2.98. So individual stocks can give you a really nice big bang for your money. I'd say this is in leg C right now. I love it. It looks good. It looks like it should go to a D. Where's my target? It's at 147. I think between 148-ish. It depends. If it makes a new high on Monday, that'll extend this and it'll take D into next week. So between 148, what did I say? Was it 148 and 152s? Because 152.28 was the high that was made way back in, I think it was early December, around about the 7th. That was a peak B minus. And I haven't done the left side, right side price time match. I thought I'd do that, but I just don't want to, I can't take time right now. Just got so many questions coming up. So, yeah, so as I say, we're in the, for subscribers, we're doing a really, gosh, I think we're in it. Excuse me. It's trading at 36.11 right now, and we're in the 29. 7 points, about 20% gain. So yeah, that's pretty good. So that's how we're playing. The other one's also got a very nice gain. We just got into it the other day. Okay, next is, I wanted to talk about that only because it's part of the rotation in the sectors. I just want to have a look at Exxon now. Exxon is trading, it gapped up earlier. Yep, it's up 3.58%. At 75.90, up 2.63 in leg D. A gap up on a Friday in leg D, but it's leg B in the weekly chart. And let's look at CVX. CVX, not CX. CX is doing quite nicely here. CVX is trading at, gapped up. It's up 3.91, up 118.56, 3.41% over the 200-period moving average in E. Remember, over the time, I've been saying I prefer Chevron to Exxon. For some reason, the chart looks a lot better. Whoa, look at the den. That was a big one. Duffy, yeah, thank you. GW Pharmaceuticals is a pick, a gorilla pick. All right, very nice. Great. Oh, good deal of information. All about this Epidiolex. Good, thank you very much. That's really important news. Next thing I want to look at is, had a question about Merck. And I want to do this because the pharmaceuticals, whoops, where did it go? I put it into the den. I type it here. Merck, gap up leg B. The question was, should I be taking off the rest of my Merck? And I said, no, it's 77 right now. If it's able to trade in the 78s in this particular move, it says that there's a chance that it breaks the outlook that said that the cup formation was stalling. This is a breakout above the arch formation. That's really important. If it gets to the 78s, then all of a sudden you're looking at a big rectangle formation and a cup formation in the weekly chart. This says, you know what? It could go a little higher. I don't know if it'll go to the all-time high up at 80.19 back on December the 4th, but it says rather have a trading stop and let it tell you. You've had great profits in Merck over the many years that you've had it. I wouldn't get out in a hurry. I'd just say trading stop. And in fact, I'd even be thinking more of the breakdown, that if it was to go under, say, 75 or 74, then I'd say, you know what, now it's kind of done for a while. But this is pretty nice action, even if it's shorter term. Next question I had was, so I did that. So Eddie wants to know, hi, Basil. I wanted to find out what to do with LTS. LTS is something we had way back. It's one of those that kind of gives you something and then it gives it back, and it has a huge move and it just stalls. This is Ladenburg Thalmann Financials. If I remember correctly, Ladenburg, weren't they the guys? He was big on bonds. He was really Mr. Bond. Everybody, I'm Bond, not James Bond, but Ladenburg Bond. Anyway, he and then his daughter took it over. Were they the guys? Maybe I'm mixing the names up. But anyway, I like it. But let's see, what did you say? Back in your report, you bought it at 289. It actually went up and then it pulled back sharply. Then it ran up into the 340s. Then it pulls back to the 260s, 270, and now it's trading at 290. You know what? You have a lot of patience, Eddie. I'm just going to say to you, keep it for now. Let's look at it again in about another couple of days. When it starts its move, it is a big move, both up and down. But if it's able to get to the 3.07, 3.12 area in the next week, I think this is going to be a good one. So you've held it this long. Let's just leave it for now. I'll look at it. I'll keep it on my list now to keep. I do have it on my list to keep watching. I just haven't put it on for subscribers just yet. I have Bank of America at 25. According to you, it can retrace to the 27s. I'm tempted to sell it and just buy it back. You mentioned this part of your portfolio. Does that mean hold more longer term? So Bank of America, I wanted to do this as well because it's really part of what we're looking at. The financials have had a fantastic move. They're taking a bit of a break right now. Bank of America hit 29.72 from the 22s, 7 points. I mean, that's more than 22%. That's a huge gain. Now it's consolidating. I would not take anything off. I'd rather be looking to add, but be very selective in the adding. The reason why I wouldn't take anything off, I think the financials are saying something's happened here that is really important. Keep it in mind. It doesn't happen very often that the financials are leading or actually moving with the big move in the general market from a serious low. I don't want to get out yet too soon. You know, for all you know, Bank of America suddenly pops to 29.20 and then doesn't come back to 28.50 even. And you're stuck and you say, what on earth? No, I'm saying keep it. This is just my opinion. Keep it for now. Do what we're doing in the portfolio. Rather look at that particular level that we have to add it, and then we'll deal with it. That's kind of the way I'm looking at it. And then what do you think about KKR? KKR is also in the financial area, and the KKR is trading at 23.54. Leg D. I'll be right back. Basil Chapman, Tiger Ignitions Hour. Dow's up 109. Let's look at our E-mini. Yep, pulling back down at 27.06.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So we're looking at KKR, which is KKR and Company, global investment firm. This is like it should be on your list. So, Eddie, keep it on your list. So you're in it, and it had a really nice pop. It's in leg D. I'm just going to say it. Your entry price at 19.5 is trading at 23.53. It could pull back. Could even pull back to the 22, maybe even 20.90 area. I like what you've got done. I like your eye. You, the one, I should be calling you and saying, "Hey, Eddie, wow, that is really nice. Strong leg A." I'm just going to say to you, hold it. I'll look at it again Monday or Tuesday because this is right in the area that I like. This is in the area of the IAI, which is the broker dealer area. AII. There it is. And that hasn't gone to a leg D yet. Just keep holding it. I like it. It's the right area. Whether it's going to hold all the way through February into March, I don't know. But at this particular point, I don't even want to say to you take some profits. I just think you've got a good eye, and you've done a really nice entry. Next thing I had was Cream, which is this is CRM, Salesforce.com. Trading up. Oh, I haven't finished notating it. So this is like a restart. So that's a B. So that's peak A, peak B. Then it pulls back sharply to 120 after going from 149. This is a stock that went from 181 down to the 114s. That's a whopper of a move. And then it's back. I'm going to treat this as gray A, and then I have no choice. I have to treat that as C gets reactivated, B, D, E, F, and this is either a G or a brand new A. I'm calling it G for now because it fits the whole scenario I'm looking at. The weekly is in leg C. This is fantastic. Oh, who asked me the question? Bob, Basil, could you look at CM? I own it at 131. Bob, same thing here. I'm just going to say to you, first of all, congratulations. It was on our list as one of those that we wanted. We didn't actually get him. We've just got so many others. It's done fantastically, and it is the leader of the group as far as I understand it. Salesforce.com. I mean, talk about cloud. There is no cloud cover here. There was deep when it was in the 181 area. But after that pullback, it's a little quicker in the upside than I would have liked it. But I'm not the stock. The stock is the stock. I love what it's done. I think it could have a little bit of a digestive phase, but I'm not sure. In this phase, 136 is the 200-period moving average. 140, about 144 is the 50-period moving average. If it takes out I think 148. Yeah, 148 to 145 should be a really good containment area. If there's a pullback, there's another one I'm following. So, Bob, congratulations. To say take something off right now, that's kind of glib. It's just really doing well. This is not to do with greed or fear. This has to do with the fact that it is a leader and it's leading on the way up. So I'm just going to say congratulations. Now, if you do use options you could use an option to kind of lock in your gain right now on some part of it. Maybe a put or something like that, or sell it. I wouldn't sell a call. No, I wouldn't play any games. I'd just be very straightforward. I love what it's doing. Just ask me again if on Tuesday or Wednesday of next week, this is trading underneath 150, 180. Trading under 150, 180. Let's look at it again, and then I might say, hey, all right, take a little bit off, and you can put that back, and we can start looking at where you put it back. Absolutely fabulous right now. If you are looking at money management, I would absolutely say to you, yeah, if you want to start scaling a little bit off as a trading vehicle, therefore you don't have to touch your core at all, right here at 154.37, I would take just enough to feel comfortable to say, I've got this, now I'm liquid here, only CRM is what I'm going to trade. And if it pulls back and you can name your positions, 149, 146, whatever it is, I'm putting it back because I'm getting it at a $5 discount. That's another way to look at it. Hey, nice move. TLT, just real quickly. TLT is, you see, TLT went to a peak C, but underneath the 123.86 level. What it's suggesting to me, this could be a right shoulder failure pattern. I don't know yet. So I'm going to put in the cup is fighting the arch. Always look at these things as which one is winning. You don't have to use the word fighting. Is roughing up? No, is looking at an arch pattern that could evolve into a cup pattern if it doesn't pull back much further than this. And if it goes higher than 122.10, then it's going to be very positive. At 121 right now, down 97 cents, it's saying that money is still coming out of bonds and going into stocks. This is what it's saying. So all I can say to you is, for the person asking about the bonds, I've been saying stuck in a range for now. I wouldn't worry about it. I didn't say anything to worry about. I think it's stuck in a range. But I will tell you that if the TLT starts to trade in the 122, I think I said yesterday, 122.35, 122.50. If I didn't, that's what I meant. That's the area that I'd be looking at and saying, uh-oh, if money's coming back into bonds and out of stocks, what do we do? And that's going to be a very important moment next week. So let me just do this again. I think I forgot again. What I was saying about the Dow is the mix was so, no, I think I finished the thought, that there's such a great mix in the Dow that if there was a pullback, there are enough Dow stocks that have had really good moves that could pull back here. So you can expect it, but instead it was the exact opposite. Yes, there were enough stocks, but there were also three Merck and the two multinational oils that spiked the market up today. So this is, to me, fabulous. I love the mix of the Dow. It is just the perfect index that I've seen in years. The XMI used to be that for me. They don't even look at it anymore. It's called the XMI index, major market index. So next question I had was, long or short the SPY. So at this particular right now, to implement a new long, I would say that it's not that it's risky in the sense that I say time frames. On a very short-term basis, I'd say, yeah, it's a little risky at 27.08. But in the longer term, I suspect that very ugly turnaround from the doji candle of December the 3rd, when it hit a high of 2,800, I suspect moving towards 2,800 over February is kind of going to be the theme. But first, I want to see one pullback, small one next week. There may be another rally. And it's that rally that we have to monitor, because I'm looking at this and I'm saying, I'm just hearing too much negativity still from too many people in the shorter term. And that's this. You could get pullbacks to give them affirmation of their negativity, but suddenly they're going to be these spikes to the upside. I think it's later, sometime in February. I'm not even sure if it's early March. There'll be that monster pullback, very much like the December, but not the December all the way from October, just from this 2,800 level, something like that. And does it go back to 23.45? I don't think so, but it's going to look really ugly, and it'll be about 2 weeks or 3 weeks, just boom, straight down. That's my thinking based on the chart formations. Could be completely wrong. Next question I had was XLP. I think I did. XLP is good to look at right now because that is in the consumer staples. Yes. I haven't notated it for a while, and it's trading at on the 200 period exponential moving average, gone from round number 57 back in November the 9th down to the 49 level. Now it's at 53, 4 points up, and 4 points down. It's right in the middle-ish of the range. I'll be right back.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, so just a quick question, Mike. You said you're going to get a G if that can extend into 1 o'clock. I'm looking at this. I've got a D on the 120. Oh, XLP. That's what it was. I couldn't understand why we had such differing notation. Oh, and then I just didn't. You wasted my time. So I'm going to come. I'll do the XLP, then we do XLP right in leg F. I think it's an F right now with the MACD good, stochastic good, and at the 200 period moving average, but it's down 27 cents at 53.12. Watch this closely because this is the consumer staples. I want to see the staples slowly strengthen. I don't mind if there's a pullback back to 52, 51 area. I would love to see it by about the second week of February. I'd like to see it in the 54s and comfortably in the 54s. I want to see it tackle stair-step moves to the upside, just like it's doing very quietly here. That'll be very important. Now I can go to the ESH19. Of course, I've got a ton of questions. Oh, I've already got, this is recycled. 1, 2, 3. This is really, it's almost, I almost wrote this in this morning for my subscribers. It's possibly an instant restart. So this is a G/C already. It hasn't gone higher than that. I don't think. No, it has gone higher. So this is a G/C, and we've got a D. in the 120-minute chart. Just it also depends on when you start your 120-minute chart. Trade station starts at right on the half hour. Why am I forgetting now? Trades, I'll tell you right now, at 12 o'clock on the hour. So that says that this is a G/C. I didn't type it correctly, and I wasted time. C, and this is now a D. So, but you both, I love the fact I've got other people that have, that by their systems, it starts at a different time. We always either at a D or an E. We're never at a C. It's usually that we get either one letter more or the D minimum that you get. Yes, this is ready for a pullback or it could extend, but right here is where other things can happen. In the Chapman wave, peak D is where other things can happen. Keep that in mind. So if you're interested in my newsletter, the opening call, we've had some really good positions. We lost maybe one today on a short side, still in two if you got them at the right entry points. But this is just a trade. This is because I think there could be a bit of a pullback here. I'm really looking to add to our portfolio to the long side, not the short side yet. Hey, folks, have a great weekend. Stay tuned for Steve, Dave, and Tom. I'll be back on Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is